Welcome to the Value Investor channel.
Welcome back, investors. In this video I'll be sharing with you the latest 13F report related to Berkshire Hathaway, so the company owned by Warren Buffett and Charlie Munger. You do remember that every quarterly close they have to report latest 45 calendar days after the closing of the quarter. They have to report how their portfolio has been evolving. So that's something that is mandatory by the SEC in the US for companies that are owning more than 100 million in securities. As always, of course, if you like this channel, please be so kind and like the video, subscribe and hit the notification button below so that you can receive my weekly updates. And as also reminding you that this content is for information and education purposes, and it's neither a solicitation or direct offer to buy or sell anything from the market. I'm just trying to show transparently and sharing my experience with you on value investing matters. So discussing about Buffett's November portfolio. So I've been looking at the latest 10Q report, so the latest quarterly report, where Buffett the 10Q report is comparing the December 2020 figures with the latest quarterly closing. And you know that I, as a value investor, I like to look at the balance sheet to see what are the changes. So you see that since now December 2020, and we are now in the third quarter of this year, that the amount of cash and cash equivalents and the amount of US Treasury bills has been increasing if you add those two together. So over the last 9 months, Buffett has been adding around 20 billion of cash and cash equivalents, while the T-bills have been increasing by 11 billion. But net there is an increase in terms of very liquid assets in the balance sheet. And those assets are carried in the insurance and other section. You see below that the balance sheet of Berkshire Hathaway is structured in insurance and other category, but also railroad and utilities. And there you see that the cash and cash equivalents are smaller. It's just from 3.2 billion to 4.8 billion. And remember as well, when Buffett is piling up cash, he tends to invest into commercial papers or T-bills. The following category, and you see it here in the red frame, is investment in equity securities. So do remember that Warren Buffett has subsidiaries, companies that are fully owned by Berkshire Hathaway. They are not listed as investments in equity securities. They are invested under a consolidated form in the balance sheet. And we have this in the other assets that we have here, and not just in the insurance and other category, but also in the railroad, utilities and energy. Just look at property, plant and equipment. You have 20 billion on insurance, and you have 153 billion on railroad. Those are assets that are owned by fully owned subsidiaries of Berkshire Hathaway. So what I will be discussing, what they have to report in the 13F report, are the companies that are listed on the stock exchange. And that's, according to the latest 10Q report, it's around 300 billion US dollars of companies that are listed on stock exchanges from the around 900 billion of assets that the balance sheet of Berkshire has. So you see that 1/3 of the portfolio, or 1/3 of the assets of the balance sheet of Berkshire are actually listed companies. And this is the actual 13F. I put it in a nicer form into an Excel file. So you see that the largest position, so it's sorted by the market capital, not the market capitalization, but the weight of the company multiplied. So it's the number of current shares multiplied by the share price. So we see that Apple is the biggest part, followed by Bank of America, American Express, Coca-Cola, Kraft Heinz, Moody's, Verizon, etc. And if we put this into a pie chart, and remember, those around 300 billion US dollars of companies are only 1/3 of the overall balance sheet of Berkshire Hathaway. We see that Apple is 42% of those 300 billion out of those 920 billion of the assets carried in the balance sheet. Then you see Bank of America's a big position with 14%, American Express 9%, 7% for Coke, 4% for Kraft Heinz, 3% for Moody's, Verizon 3%, etc. What is interesting to analyze is the variations, and I'm looking here at the variations between the September closing quarter and the June 2021 closing. So basically they have been, and I've tried to color code them to make the the reading more easy, there have been a couple of changes. In terms of increases, we have seen Fluor and Decor Holdings, Royalty Pharma, that went from 0 to a certain amount of shares, and Chevron has been increasing between June and September 2021. You see that what is in red, that one of the Liberty Global Class C instruments has been fully sold by Berkshire Hathaway, and then Merck, which was one of the pharma companies that you see in the September 2020 column that he added, or that they added as a company, with 22.4 million shares that they now, so they started to decrease a couple of quarters ago, and now they have fully sold out Merck. Organon, it's something I didn't look into it, what this company is, but they added it in June, and a quarter later they have fully sold it out again. So I'm not sure how to interpret this. In terms of decreases, but with still active positions in the portfolio, so we see the pharma groups like AbbVie, Bristol Myers that have been added in September 2020, like Merck, where Berkshire has been selling and reducing by between 26 and 32% the amount of shares that they had. Liberty also a decrease of 20%. And then you remember in the portfolio that Buffett, similar to what he had with the US airlines, if it was American Airlines, United, Southwest, etc., he actually has American Express, MasterCard, and Visa, so the three companies in his portfolio, in the portfolio of Berkshire Hathaway. And we see that there was no change on American Express this quarter, but there was a change in MasterCard and Visa, where the amount of number of shares, so those figures here are amounts of number of shares, the number of shares has decreased by around 4% for Visa and around 6% for MasterCard. So I took a little bit more time to look into what Fluor and Decor is, so the new additions in the portfolio and the increases in the portfolio. So this is, it looks to be a wholesaler with 150 plus warehouse stores across the US. And the financials, I look quickly at the financials. I mean, you can look at the financials. They're pretty decent. I looked at debt to equity is pretty decent. The earnings per share pretty decent. So, but again, it's not my investment universe. I only invest into very strong international brands. But probably they have an opinion, Berkshire, why they have been investing into this company. Royalty Pharma, so didn't know this company before, like Fluor and Decor. So it looks like from their investor relation website that it's the largest buyer of biopharmaceutical royalties, and also they're a strong funder of across and inside the biopharma industry, which is absolutely not my investment universe. For some of you who maybe my trainings or listen to other YouTube videos, you know that I'm not investing into pharma because I do not understand that industry. Then Chevron, they have increased. So actually they had a big position in Chevron that they decreased nearly by half. And now this quarter they have been adding again Chevron with around 20% increase on the latest position that they had in June, going from 23 to 28 million of shares in Chevron. What I did as well before wrapping up, I consolidated kind of the main, let's say, financial metrics which I look into. It's not the only thing that I look into. Obviously, I do calculate the intrinsic value and the free cash flow to the firm, free cash flow to equity. But I wanted to look a little bit, and from the positions that have been moving around, the one that worries me is Bristol Myers with a negative ROIC and a negative interest coverage, which is not good at all. They have been posting a loss actually. And then you have other companies like AbbVie that has a pretty high debt to equity. And then, but generally speaking, we see also even at current market prices that the dividends for a lot of those companies are pretty decent. And please remember that Buffett has not been buying these companies now, so probably he has been buying them before the market went up. So probably the dividends he's getting out of those companies, including share buybacks, are higher on the yield versus the current share price. So with that, wrapping up here, hope you enjoyed this video. I tried to make it pretty efficient, pretty sharp, that you get the latest update. What is Buffett's and Berkshire's latest portfolio update? And as always, if you want to know more about value investing and company valuation, obviously you can find in the description part of this video the link to the Udemy Skillshare platform, where I have a certain amount of trainings. It is on dividend investing, value investing, company valuation, but also a beginner training for if you are interested in the stock market. So thanks for tuning in. Do not forget to hit the subscribe button, and talk to you in the next either YouTube video or training or webinar that I organize. Thank you. See you and stay safe.